All right, today we're going to be looking at section 8.4, day 3. Today we're going to be looking at the stocks and bonds portion. There is a lot of vocab in this lesson, and there will be vocabulary on the mini quiz, so make sure that you feel comfortable with the vocabulary. Our first vocabulary word is a stock. A stock is simply a share of ownership in a company. So if you own stock, you're technically a part owner in the company. A shareholder is an investor who owns stock or owns some percentage of a company. Trading is buying or selling stocks on the stock market. And a stock exchange is a place where stocks are traded. Here are the two ways that you can make money in the stock market. The first one is by earning what are called dividends. Dividends occur when the company distributes all or part of its profits to the shareholder. So you would still own your stock in the company, but your dividends are almost like bonus points or bonus money that you're getting while still owning the share of stock. The second way that you can make money in the stock market is called capital gain. And this is where you would sell your stock for more than you paid for it. So this occurs when the sale of a stock is greater than the amount you paid. So let's say you paid $2 for the share of stock and it increases in value and you sell it for $20. You would then make a profit of $18. Capital loss is the opposite. So let's say that you bought a share of stock for $2 and when you went to sell it, it was only worth 50 cents. That would be considered capital loss, losing money. Another vocabulary word is the price to earnings ratio, which you'll see in the chart. It'll say PE ratio for short. That is the quotient, which remember quotient stands for division of the closing price per share to the annual earnings per share. This is the formula, actually will be on your formula sheet. The PE ratio is yesterday's closing price per share divided by the annual earnings per share. Bonds. Now I want you to kind of, if you're using your notes or notebook paper, go ahead and just draw a little bit of a line right here, because bonds are not part of the stock market. So I want you to realize that this is kind of a separate subject. Bonds are not part of the stock market. Bonds are a method that a company uses to raise funds without distributing ownership of current stockholders. So stocks are when you actually own part of the company. Bonds are not owning anything. People who buy bonds are just lending the money to the company. Essentially, you are lending the money to the company with a set interest rate that you would earn over a set period of time. If a company goes bankrupt, the bondholders are the first to claim the company's assets and hopefully get their money back. Financial portfolio is a listing of all of the investments that a person holds. So that would be a listing of, what all stocks you own, if you have any money in bonds, all would be listed in your financial portfolio. All right, a big part of today's lesson is just reading a stock table. So here's an example of one. The titles are pretty self-explanatory. Only a couple of them might be a little bit confusing. I'll go over. So the 52-week high is the highest price in the past 52 weeks, which would be the past year. And the 52-week low is the lowest price. The company's name, the company's symbol for trading. So here are a couple that some students get confused with. So the dividend, this stands for the dividends paid per share. So they paid 44 cents per share in dividends. That's, again, your dividends are extra money that you get from owning stock. So if you owned 10 shares, you would need to multiply this by 10 to figure out how much you earned in dividends, because this is only the price per one share. The yield percent, this is called our percent yield, which is the annual percent on the return of your investment. So it's kind of like your interest rate per se. Your PE ratio 19. Again, this is found by taking the closing price divided by the annual earnings per share. Here's another one that a lot of you will mess up. Volume of 100s. This tells you the sales of the volume in 100s from yesterday. So when it says how many shares of this stock were traded yesterday or sold, you need to take this number and you need to multiply it by 100. That's why it says volume 100. So you either need to add 2 zeros at the end or actually multiply by 100. And then the last few are pretty self-explanatory. The high price is the highest price the stock traded for yesterday. The low is the lowest price it traded yesterday because the price fluctuates throughout the day. The closing price is the price at which the stock was traded at the close of the business day yesterday. And the last one is our net change. The net change column, you'll either see a plus or a minus. Technically, you could have a 0 there or an asterisk, but the net change is showing you the change in price from the market close 2 days ago to yesterday. Because you're reading this chart, it's technically like in a newspaper or online, it's backdated. So it's from 2 days ago to yesterday, how much the net change in price. So all we're going to ask you to do is to read a sample stock table and answer the questions. So what were the high and low prices for the past 52 weeks? Here's the high, here's the low. 63.38, 42.37. Pretty simple. All right, here's one that I see students make mistakes on. If you owned 3,000 shares of Coca-Cola stock last year, what dividend did you receive? Now remember, the dividend column tells us how much we made per one share. So if you have 3,000 shares, you need to take 3,000 times the dividend in the chart, 0.72, and we should get $2,160 that we earned. Again, remember, dividends are like extra money. It's when the company distributes part of its profits. Part C, what is the annual return for dividends alone? That is your percent yield. So that would be 1.5%. How does this compare to a bank offering a 3.5% interest rate? Well, 1.5 is lower. So that would be lower. The dividends are lower than a bank account in this case. How many shares of Coca-Cola were traded yesterday? Again, this is one I'll see you guys get wrong in the mini quiz. How many shares were sold is this, but it is volume of 100s. So you need to take that number and multiply it by 100. A lot of you will forget to do that. We should get 7,203,200 shares. So just make sure you multiply that by 100. That's why it says volume 100s. And the last couple are pretty easy. What was the high and low prices for yesterday? And that's our high and low. So $49.94, $48.33. At what price did Coca-Cola shares trade when the stock exchange closed yesterday? So that's the closing price, $49.50. Part G, what does the value or symbol in the net change column mean? So the net change column says plus 3 cents. So that tells you the change in the price of one stock. It tells you that the price increased 3 cents from 2 days ago to yesterday. The price increased 3 cents from 2 days ago to yesterday. And the last one asks us to compute the Coca-Cola's annual earnings per share. So this is using that PE ratio, but it has been kind of rearranged for us. And this will be given to you on your quiz, but you can also jot it down in your notes so you have it. The annual earnings per share is the yesterday's closing price, which was $49.50, divided by the PE ratio, which is 37. So we're going to take $49.50 divided by 37, and that gets us $1.34. So you're approximately earning $1.34 per share annually, which is per year. And then our closure, how can you make money in the stock market? There were 2 ways that we discussed. See if you can think about them. Go ahead and pause the video while you think. When you're ready to hear the answer, here they are. The 2 ways we can make money is capital gain. Remember, that's selling your stock for more than you paid for it. The second way is earning dividends from companies. Again, make sure you're comfortable with your vocab before taking the mini quiz.